following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. That little jazz in the background there. Awesome music on TFNN. How about the DJ side of TFNN? It's awesome. Well, here's Deutsche Bank. And I know you guys are scrambling, falling over yourselves to go open an account at Deutsche Bank right now. Think how many people, I'm being sarcastic, of course. Think how many people are going, you know what? I'm not going to really give them any new business right now. So you got that going on too. You've also got technically, I mean, you know, we almost got up into that area a couple of weeks ago, 1579. Oh, we're going to hit Wells Fargo, Russ. Don't worry about that. Deutsche Bank getting up into that area. This, you know, these profiles, I love them because these inflection points are great places to pick battles and former support, now resistance type scenario, kind of technical analysis 101. Basil talks about it a lot, as well as some of the other hosts, but just gives me a kind of a line in the sand to really focus on a lot of times on a long-term basis and where I have to say uncle if I'm on the wrong side of the trade. This time it's kind of been okay to be short, not okay to be long, even though here's the intermediate dailies. I mean, the long-term trade on this one, it's pretty evident, and now, you know, we talked the other day, this thing could go into $5 areas, the $5 area, excuse me. And, you know, no matter what the Merkel or whoever else does over there to try to save things. And, you know, what's wild is, you know, CNBC makes a case sometimes for defending things and people. Stumpf. I don't know if you heard that thing by I forgot her name, Carusa Cabrera, about Deutsche Bank this morning. Things don't have to make sense. Here's the S&Ps. 2133 number we talked about. I mean, you know, I talked about 2049, 2050 being support there. That was broken. I think the impend, and we talked about this banking thing could kind of, things creep out of left field sometimes, and this could kind of get some legs. And we talked about being a little, you know, aware of that at least. And yesterday we reached a low of 2037.25. We reached a low this morning of 2135. So that weekly number down there has kind of held that 2133, 2134 rounded off. So, you know, what do you do with this now? I think today, and we had a pretty big sell-off yesterday, not a bad close, but today, and I'm going to pull this up really quick. I was looking at stocks that followed through on the downside. You know, kind of a mixed bag on the breadth as of yesterday's close, and then we're about where we are at yesterday's close. So 2149.75, that's going to be your kind of line in the sand for shorting against it or waiting for pops above to go long. But I think the temperament right now, a little bit of uncertainty combined with the political scene, and you know, this guy's sitting on the getting grilled. I think they've got a guy on CNBC right now talking about a Democrat from New York, Gregory Meeks. I'm kind of listening to him in the background. This guy was kind of relentless on the Wells Fargo CEO yesterday. I know you guys know that, but you know, we've talked about some more shoes to drop here. You know, Deutsche Bank, Wells Fargo, you know, what's really going to change, right? I mean, these guys over-regulate things. In fact, you know, that's basically what happened to the broker-dealer business. They just run all the small guys out of business because there's no way to really function, you know, with the regulatory overhead expense of 150, 200 grand a year just to deal with new regulations. And that comes off the bottom line. So, at some point you just got to say the heck with it. So when they start getting into this regulatory kind of mode, it just puts extra, well, thank God it gives people like Wells Fargo less room to, be criminals. But it also puts a lot more, expense on the bottom line. And, we talked about more shoes to drop on Wells Fargo. Kind of got a gift getting back up into that area that we talked about to short it again. When it was kind of caving in, and last week we had that rally back up. It was just like a dream scenario. And, there's more to come on this one. You can't use this as an indicator, but it was just funny to walk into a Wells Fargo branch. I walked in there twice this week just to kind of, what's the morale factor going on here? It's just unbelievably bad. People don't even want to look up when you walk in. Funny. Anyway, but, I've still got an account there, so what does that say? That's kind of like Tom and I with this Bloomberg terminal behind me. Thing costs you get disturbed every time you get an invoice from them. And Tom and I have talked about this, but have we switched? We've been talking about it for 2 years, and it's still sitting there. So, creatures of habit. Anyway. AT&T, wanted to pull this one up. So this is an interesting setup, and the reason I pull it up is because this week we've got a really thin profile on a relative scale. This one, 4034, 4152 up top, so we've kind of explored that whole thing. This is a great example of trading the breakouts on this. Either way, so this is one where I kind of really hope to find things like this, because this kind of clarifies the air on kind of a nice pinch in and volatility, a new balanced area, and it's very thin. And this is a really unique situation to trade closes outside of this. So that's kind of what I'm looking at AT&T. I had an email about that, actually. Okay, what else? Excuse me. So Deutsche Bank, we've hit Wells Fargo, as we always do. Bloomberg slam, of course. Do you guys catch the Harvest Moon that they were playing this morning on CNBC? Nice music. Hadn't heard that in a long time. Neil Young. So, guys, we'll be right back from breaking a little bit. We're going to talk a little bit about IBM Watson again. And we've been talking about that for trading, but want to chat a little bit more about that. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're going to look at the euro really quick before we start rambling again. Talked yesterday, hopefully using this 112.48.49 as a little bit of a area to play defense above, say uncle above there, and just kind of hit this thing on the short side. I'm a huge fan of this thing ultimately getting that down into that 109 area. I like how this is kind of lower highs down into this. This is the weekly, the POC, the mode of this profile, this pretty wide profile on the euro. And I'm looking for this thing to just break down as this is a long-term trade for me. Just no confidence in what this thing is going to do relative to the dollar. The yen trade got a little bit of a bounce off of those 134, 30, 33, 34 areas. We've been talking about this one. Not really excited about this thing continuing to head north. We kind of hit the POC and backed off of that 134, 33, 34 area. But, I still think, stepping back and looking at this now, it's kind of crowding this area down below, and probably will get some folks out of that trade on the long side. And that would be the time letting somebody else figure out that part and then trading the reversal on it, in my opinion. The Aussie, this is kind of a cool scene right here to me. We hit our targets. We backed off. We had a POC 75.84 on the weekly, and that coincides with that 75.87 on the daily, and we're kind of bouncing right off of there. So this is why I really like, again, you're kind of blocking out one side and you're declaring what's the support areas and what's the breakout areas. And in between, not a lot of ways to, really quantify that it's a good time to play around with it. So again, we talked about this support area 75.87, and then we talked about the up top factor 76.89. Looking at some comments in the den. So decent little trade. Still like the Aussie from the long side, of course. You guys have heard that quite a bit. We're going to get back to our futures section here really quick, and we're going to hit the oil scene. I've been a little bit more, non-directional and bearish, if you force me to make a trade on this thing, then bullish. I still think this might be a no trade right now still. I mean, even though we've had some volatility and definitely a move up, it's just been something that you don't have a ton of different things going on here to really latch onto. Here's the daily on the crude trade, and kind of smack dab in the middle of the profile there, as well as still in the middle of the profile on the weekly. Gold. All right, so yesterday talked about this, kind of getting back down below this 31.33 area, still below it. Yet today, in fact, we've reached a high of 31. So, and then we backed off to 26. Thank you, Mr. Logan, for telling me what's already happened. I'm supposed to tell you what's going to happen. So now, and again, the numbers are the key. This will support. Nothing to really play around with down here. The numbers I'm looking at, again, just like the Aussie dollar trade, same principle, 1309, 1310, and breakouts above 31.33. That's the only, in my book, on the intermediate to long term, that's kind of the only trade right now. And then you've got massive support at 1296. So same principle as the Aussie. This is kind of a sit tight, in my opinion. And if you want to do a contra trade against the long-term trend up, I mean, I think, this kind of, that little line in the sand this morning, that was okay. But again, that's the riskier trade. We're always trying to figure out what's the not riskier trade. The dollar, defending this 94.91 still, and I still like this going north. You're going to hit the S&Ps again really quick here. Just to kind of show you what's going on this morning. There's 2149, 2150, but a little non-directional on the breath yesterday on the close. I mean, this is kind of just massive fat middle grounds here. I don't know if you can see this, the blue area, the weekly especially. I mean, just to get some stats, there's half the S&Ps are within the balanced area right now on the long term, on the internals. And we're going to take a look at we're going to take a look at stocks in a downtrend by definition here. Wow, Kroger, amazing. This is another one. The market comes in, it gives these weak stocks another reason to just kind of cave in, and things on the lows go lower, and you can play around with the crack of the stock world, the Amazons, the Teslas, the whatever, and I'm sure there's more. But we've got, and I'm getting some, what have I done here? Let me reopen this. Let me go to e-signal charts here really quick. Might be easier. When you find something that just has been raising their hand and showing themselves, I forgot, somebody called in about this too, or posted in the den. This is kind of the don't be a hero, play around with the fire areas of the S&P, and just, it is what it is. It's been a nice little trade. It's been a weak situation. This is our weekly as it broke down here. And relatively weak stocks in a market that is going sideways and north sometimes. I mean, when the market pulls back, this is the type of reaction you get a lot of times, and it's a little bit easier situation to deal with, and you're increasing your odds. Here's General Mills. We've been talking about this one. Market comes in, this thing, again, weak stocks come in. Gilead Science. Man, what in the world is going on? Okay. Gilead Science, again, kind of showing itself. Nice little reaction. Mylan. This was a neat little trade here. I know this is very news driven and nobody in the world likes these guys right now, but last week we got it into that long-term 43.67, and this morning it looks like we're trading right at 37.92. So picking up 5 points in a $40 stock. What is that, a 10, 12% move down pretty quickly. Nice little trade there. Johnson & Johnson, we've been talking about this one showing itself, and another shoe dropping here. This is kind of cool because now we've got a profile this week, and we've been talking about, this thing not being over on the downside and showing that relative weakness. And now we're probably going to have a close below another new profile, and you've got a lower kind of area to play defense against on this one. So why is that doing that? Sorry, guys. We're going to check our charts here on the scanner when we come back, but we'll be right back. I promise we'll talk about Watson a little bit.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. I was listening to CNBC this morning. They were talking about Watson and healthcare. And, it really brings to light, you really can go into a rabbit hole way down there thinking about the possibilities for this. And I'm sure you probably already have. We're asking a machine now, which is artificial intelligence learning, doing all the stats, how to advice on our health and how to guide us through, taking care of ourselves. And, it's amazing. We kind of taught machines what to do, and now they're teaching us what. I know you guys have, that's a deep thought type of thing, where this thing's ultimately headed. You start thinking about the Matrix movie and all that, but even programming. I mean, I've got guys, I'm very deep into that scene, put it that way. And, at some point, probably in the very near future, we're probably not going to need programmers. I mean, because the Watsons of the world and things like that, I mean, you're going to throw out a concept and it's going to write the code and take care of everything. And then that's a whole nother sector of, think how many people are in the software industry that basically just probably going to just cease to exist. And then it'll kind of feed on itself. I mean, this could really get, I'm not a troglodyte by any means, but man, can put some crazy future thoughts in your head there if you really start thinking about it, and how many industries a Watson type environment is really going to just kind of kill as far as human, intervention. And we have to believe the machine type mentality, blah blah blah, stuff like that. So I'm looking forward to laying in the bed with a feeding tube and a catheter and the virtual reality goggles, and just laying there. I'm just kidding. But man, God, this thing could really get crazy soon. We're going to take a look at JP Morgan. We're kind of smack dab back into the unfair lows here, kind of touched them the past couple of days, but you got to look at this one and you got to say, you got to still look at it as a relative strength situation in my book. So 65.14, as you guys know my thoughts fundamentally on JP Morgan, but technically the thing is actually acting extremely well. When that thing starts breaking, if it does, then I think you'll start seeing a lot more of the XLF participants really just start, the spine will start breaking. But until then, we've still got some banking stocks that are hanging in there. And I think the market's looking at that in general right now and getting a little concerned. 1905 unfair lows on the XLF, and we closed yesterday at 1904. So this is kind of a big support area for the XLF. Any weekly closes below there, I think, are going to be pretty daggone bad. All right, so we're going into downtrends again. These are some stocks that we kind of had our finger on the pulse of. T. Rowe Price, that's one that we've just, nothing happening there. Wells Fargo's on this list, obviously. Johnson & Johnson, these are ones we've been kind of following here. Gilead Sciences, BMY, Bristol Myers, this is another one. The gift that keeps on giving here, and the cool thing this week, if you've got the scanner and you've been kind of following this, is we had a new profile appear above price action, which is always, I don't think we've seen too many instances when we've had that condition happen where we didn't just continue to follow through either on the downside or upside relative to where that profile appeared. So that long-term weekly appearing below price action, then you've got a place to play defense. And this is a great indicator. The algorithm's saying, we're actually outputting a balanced area or a profile, in this case above price action, and that means we're just going to continue to sail south here on Bristol Myers. This has kind of been the gift that keeps on giving here. Here's the daily too on BMY. Just a sick situation here for BMY. Don't try to be a hero on this one. The market pulls back. This thing just gives it up. That's exactly what you want to see when you're doing a relative weakness type trading game. Thank God, Terry, it's your old employer. All right. Here we go. Salesforce. We got to talk about this one too, because they kind of, Microsoft, I know you guys know the news about LinkedIn. Now Salesforce is, it's funny to me when a company that just gets to be where Salesforce is, and now they're claiming antitrust violations and stuff like that. When somebody else scoops up a company they wanted to get hold of, and what would have been the case when, would they have wanted somebody to sue them via an antitrust violation? So here's Microsoft. I don't know the prints this morning. I don't know if this is a valid print, 5745. Maybe we need to wait a little bit for this. It's 8:30. I guess that's a valid print. So 5745 on Microsoft. Let's just take a look at the coolest symbol, CRM for Salesforce. I don't know if that's a real print either. No, we don't have any prints on Salesforce this morning. So might want to keep your eye on that one. Here's the kind of close below breakdown retest situation on CRM Salesforce. I would love to see how this. I don't think we've got any prints this morning, so we're gonna have to wait and see on that. But that's kind of a LinkedIn driven scenario right now. Let's see. So, what were the stocks that were breaking out yesterday relative to profiles? Not too many, but some little glimmers of hope here. Here's Caterpillar. And there's the weekly and Fridays. And this was kind of, really strong stock on a relative scale lately, and crowding these unfair highs as the market was kind of petering around. And then we get the pop. So those unfair highs, 82.75 on the daily and 84.70, those have all been cleared now. So now that area is, you got to look at that to some degree as support on this. And this has definitely been fighting to go higher as the market's been kind of blah, 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 blah. So here we go. eBay. We've talked about this one. We got a little pop here off of these 31.79s. I want to pull this up in eSignal. I don't necessarily disagree with that, David, on Salesforce and Microsoft. If David wants to call in, I'd love to hear his thoughts on it. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Looking at Big Mo here, Altria Group, and this was on the downtrend resistance sort in the scanner a couple of weeks ago. So again, kind of breaking profiles, going back and retesting. You get some really, and that's going to be, again, very clear in the scanner to show those type of opportunities. And this will be that sort. Let me, here we go, downtrend resistance. So it's going to show stocks that are kind of breaking and then going back. And Walt Disney is, man, our charts are weird this morning here. So Walt Disney, this has kind of been the gift that keeps on giving too. We've talked about this one, staying away from. Here's the weekly on that. And new profile just sitting right at the unfair lows now on Walt Disney. But looking at Big Mo, what do you do with it now? Really acting well as the market comes in. We're trading, looks like 62.82 this morning. Nope, we're not printing yet. We're not printing yet. So this is new kind of breakdown situation here. And the cool thing is this would have been also about 4 or 5 days ago on downtrend resistance, because we kind of broken on the weekly before. There it is. And then kind of rallying back up into that next resistance area in that protracted downtrend. And now you've got a breakout situation possibility here, 62.82. And this is where you're kind of not supposed to be looking at buying support, because, the long-term leverage is on the south side. Here's your resistance area, and here's the breakdown. Just kind of, same concept as the Aussie dollar we talked about earlier on Big Mo. Let's take a look at silver. Somebody's asking about that. Oh, I'm in the wrong area. Here we go. December silver, we talked about this, really long and strong. Excuse me. So the maximum buy point on that one was around 1850, 1885, 86. Never got there a couple of days ago, but just kind of heading north. I'm just looking at this as a long-term trade on the to go higher. There's that big line in the sand, 1861 on the day trading level. The good news is now you kind of broken above profiles on the 240s, came back this morning, used it as support, 1932.33. So again, looking to try to use something to play defense and guide things back up. I mean, this is kind of cool. I mean, you're, again, breaking above the balanced areas and using that area now as support. And that's the way I'm looking at silver. All right. All right, here we go. Let's look at the oil sector really quick. And there's that XLE. what's not cooperating here? Let's just kind of figure that out first. Let's take a look at ExxonMobil. See what's happening. All right, so. All right, I think we've got a caller, Lou from Nashua. Lou, you there?
Yes. How you doing, John?
Doing all right. How are you?
Okay. Look, I was looking at wondering if it's not too late to buy puts on Deutsche Bank and buying calls on TWM.
Let's look at TWM first.
Okay.
Ultra short. Okay, I don't trade a lot of ETFs. Can you? Okay. So this is the. As we buy this, we're hoping that the Russell goes down. Is that the deal here?
That's right. That is
okay.
Right.
Okay. Yeah, I mean, I don't think that's a bad play. Actually, it's definitely been a protracted, downtrend here. But you're talking about buying puts or buying calls on this one?
Buying calls.
Yeah. I kind of like this. I mean, I think your targets are pretty well defined on a pop on this one, 3170. And I think it looks like we could possibly have a weekly. It looks like we're printing this morning, and we don't have a print yet, but it looks like we're kind of wanting to defend that area down here on the bottom of the profile, and we could explore, up top, and then market's kind of looking a little shaky here. So yeah, I don't think that's a bad play. Let's take a look at Deutsche Bank again for you.
Okay.
We talked about this earlier, but let's just wait till our daily pops up here. Yeah, I mean, looks like we're trading up a little bit this morning, 1191. There's a lot of people obviously getting bearish on this stock.
Yeah.
That's kind of the risk here. It's like, there's no mystery on this one. But if you're going to do that, I think, you could do some kind of bear put spread, or, just kind of short the stock and go long, or excuse me, short the stock and long. Yeah, short the stock and go long in the money calls. Right. And that way you kind of would really take advantage of a big downdraft, but you kind of are paying really next to nothing for the insurance, and you're looking for a little bit bigger move there. But you could have some. There's a lot of fundamental news that's going to drive this, obviously, and it's kind of already made some significant moves. We're down in the last 2 or 3 weeks we're down 33% maybe.
Yeah.
Yeah. So it's a dicey situation to jump on board on the short side in a big way right now, but yeah. So yeah, but if you're going to do that play, there's ways to kind of mitigate the risk a little bit. I think the puts are probably pumped up right now. They're probably very overpriced. So that's the risk. So if you're wanting to sell it, maybe selling the underlying and buying the in-the-money calls might be the play there. But yeah. So
the TWM, what do you have for a target on that, do you think?
Target on TWM, the initial target in my mind would be 3170. That's the initial target where you could probably, because there's some resistance at 3117, 3170. That would be kind of where you could start taking some weight off for the trade.
Yes.
And then if you get a weekly close above there, then I think you can really look at that 3170 area as support for it to even go higher. But
right.
That would take a lot. I mean, just getting back in the balanced area today above 2933 is going to be a big deal. I like that kind of key reversal look down there too. So I think your odds are much better dealing with TWM on that level than Deutsche Bank.
Yes, I can see that.
Yeah.
I appreciate your help on that.
You're welcome, Lou. Call in anytime.
Thanks,
guys. Well, you're welcome. Looks like we're going to head to break here, and we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show, and I think we're super honored to have David White on with us. David, are you there?
Yeah, super honored.
Super.
Yeah, okay. Oh, okay, I'll bite.
How are you, man?
Pretty good. Yeah, you said you wanted to talk a little bit about Microsoft and CRM and LinkedIn.
Please
and,
give us insight.
Just my thoughts on it.
Absolutely.
The Microsoft bought or is trying to finish buying LinkedIn for the same reason that CRM wanted them. They've got all the people that have signed up and all the business contacts and everything. And what everybody wants to do is supplant a company that one of the hottest startups called Slack. And if you don't know what Slack is, it's kind of an email system for in-company use. Everybody loves email. Everybody hates spam. Slack is email where you have to basically approve everybody that can email you, right? And you have discussion groups, so it can kind of be like a Twitter to many people, but it's also for being inside a company, right? So the idea is that Microsoft wants to have an equivalent of Slack and go to the next level of what is called opt-in email, right? Where only the people that you want to talk to can email you at all.
On the Slack, can you host that on your own kind of cloud, like private, or is it still something that Slack kind of controls on the back end?
I think you might be able to. That's the original
Okay.
way it worked. But I think that they moved to the cloud. I don't know if you can still do it. My guess is eventually they'll force you to their cloud.
Gotcha. Okay.
But yeah, it's just everybody in Silicon Valley uses it, and Microsoft sees it, CRM sees it, and everybody wanted the key piece, which is about 200 million users that have already signed up and been vetted, right?
Mm-hmm.
So now you've got this pool of people that can talk to other people, and you kind of know who they are. So the whole point of getting LinkedIn is not that you couldn't go do the same thing, but you've got the 200 million people to start off with valid email addresses and contacts, and you can get those folks in, then maybe you can get into the company itself with your own version of Slack. So
Right. And
that's,
then also,
I mean, that's kind of it.
more efficiently push Microsoft Dynamics on those people and those companies and all the other stuff that goes along with it, I assume, right?
It is once you get the camel's nose into the tent, right? The camel's coming. Microsoft's very good at that.
Do you think it's worth $26 billion?
LinkedIn?
Yep.
Yeah. Yeah, it should pay back in 3 years for
Wow.
Microsoft. Just doing what it's doing.
Right.
The LinkedIn kind of sold down mostly because everybody just took their money out of Salesforce. I mean, out of LinkedIn and put it in Facebook when Facebook started going up, right?
Right.
So it was 6 of one, and everybody thought, okay, Facebook is the one to go. I always thought that LinkedIn was the better business than Facebook. I thought Facebook would end up being more of a Twitter thing, and
Yeah.
I think it still can. Everybody's already starting to move to Instagram and Snapchat and using Facebook a whole lot less. So, it may be Facebook may be one of those companies where Snapchat and some of these other kind of technologies ends up being like eBay. Its big deal was buying PayPal, right?
Right.
The eBay part wasn't all that great anymore. Facebook may be the exact same thing. They may have had kind of a one-off that runs a few years. It's still popular, but kind of getting less and less every day.
Well, David,
So,
thanks for calling in.
We're done.
Yeah, we're done. And, man, this has been great. So
Okay.
look forward to your show today.
Good enough.
All right. Thanks, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.